All right, Pack, welcome back to another video here on the Dividend Doggo Show on YouTube, and I am bringing you in for the weekly portfolio review. It's been a crazy week here. It's been snowing all week. We had a couple trees come down. The stock market was pretty good this week. Listened to some videos from some other YouTubers, found a stock that I liked, and did a little bit of research into it and decided to invest in it. So that's going to be interesting to add to the portfolio. And as you know, we are doing a kind of review of the entire portfolio, including 401ks and cash on hand. So I'm going to add to that. We're going to finish off the 401k portion, and then next week we'll be going into all of the cash on hand and other accounts. So I decided I'm going to kind of split it up across like 3 videos so that it's all done by the beginning-ish, like first 2 weeks of December. So here we go. Let's go ahead and dive straight into the portfolio here. You can see that we are doing pretty solid for the week. But overall, we are at $219,000 in gains. 162 of that is market gains, and then 57,000 is earned dividend income over just about 3 years. This portfolio is just over 3 years old, and is going to continue to grow hopefully for quite some time. It's basically to bridge the gap between early retirement and being able to access 401k funds. So let's go ahead and dive into this is what all of the categories look like currently. You can see that there's another category added in, and we'll get to that in the very near future here. So let's go look at the week's performance. So as you can see, we did earn about $438 in dividends for this week, and we had market gains of about $3,202. So overall, a couple sectors were in the red for this week and a couple sectors were in the green. It overall kind of leaned more toward the green. Finance had a little bit of a rough week there, being in the red. Utilities were also in the red, and the new category, which is a returning category, I used to have industrial in there, that is also just slightly in the red. So let's look into each of the sectors here and break this down real quick. So common money has become the largest portion of the portfolio, and I did have a little buy in this sector this week. So we had a little bit of money come into the portfolio from the credit card rewards, and I used that to buy additional shares of SCHD. So I'm going to go ahead and jump over to show you that. So here we go. Rewards redemption. This is the credit cards rewards program through M1 Finance. This is the brokerage you're currently looking at. I do use this credit card to buy a bunch of different stuff like Chewy, Netflix. You get 10% back with Netflix. We resubscribed to Watch Wednesday and a couple other things that had come out since we had kind of cut off the service. We've kind of gone to this like rolling streaming service thing because there's never enough time to watch everything on every channel. So we did do that. So spent a little bit of money on the credit card this month, and we got some rewards in. That buy you can see right here was straight into SCHD. This was $102 worth of SCHD, so just over 1.29 shares. And you can see that I added a pretty significant chunk of money to the portfolio. Did 2 deposits this week, one at the very end of November here, and then one to spruce that up because I wanted to buy about 100 shares of the stock that was added to the portfolio. So overall, Berkshire Hathaway was just barely down, but SCHD was almost 1% up. So overall, doing very, very good. I love building that up. I love the fact that it's become the top of the portfolio as I have it set to and intended to. Continue raising up the index funds. Sweet, simple. A lot of people would call that very boring. I call that being very, very conservative and honestly a little bit lazy. It makes it easy. It makes it simple. It makes it just so you can sleep at night and rest easy. So overall, I'm going to continue to keep doing it. Now, consumer was actually up about 3% for the week. We had Altria up almost 6.5%. We had Home Depot up over 1%, Coca-Cola up 3%. Costco was down, even though the earnings were okay. I wouldn't say anything was super stellar or anything, but I'm not really worried about this. Honestly, if it comes down more, I'm going to buy more Costco. In fact, I have to go to Costco today and get dog food, and got to get the rotisserie chicken. So then we have Lowe's 1.83%, Target up 0.48, and PepsiCo up 1.49. So overall, the consumer sector definitely had a pretty good week for my portfolio. Now we get to the doozy. Finance, T. Rowe was the only one in the green, kind of funny, but everything else was in the red. Bank of America and OZK both down almost 3.75% for each of those. JP Morgan down only 1%, Citigroup down about 2%. Just gonna keep hanging on there and earning those dividends. You can see for the week we earned $120 from one of those stocks, which is absolutely fantastic. That'll get reinvested in about a month. Then we have healthcare. In healthcare, we have AbbVie and we have Johnson & Johnson. I have not added to Johnson & Johnson in a very, very long time. I just kind of like the position where it was, but I do kind of want to get this up a little bit higher than what it currently is, so that it's more of a contender there with the AbbVie position. I don't know if it'll ever get to this 40% number, but I might start rolling the AbbVie dividend just straight into Johnson & Johnson and see how that kind of builds up. Let's see, for utilities, we have Vistra and Duke. They were both just barely in the red this week, so overall not too concerned with this. They're down about $180 for a $50,000 position, and nothing to really lose sleep over or anything like that. Vistra's plan going forward is kind of interesting, and if that stock does continue to go down, I might reinvest some more funds into it, even though I sold about 115,000 I think in Vistra earlier this year. Overall, their plan going forward is pretty nice. I just thought that the stock had shot up way too much, so it deserved a little trim. All right, for monthly dividend stocks, we are looking at just BST currently. This position is down pretty significantly off all time. However, if we pull this down and we look at the 1 week, it is up just slightly, about $186 for the week, which is pretty solid. I'm pretty happy with this position where it's at. I might continue to add a little bit while it is still under my cost basis, but every month this is now compounding almost 2 shares, which is absolutely fantastic, and it's creating its own little snowball. Absolutely love it. So let's go ahead and let's dive into what did I add to industrial and why did I name this industrial/railroad. That's what the RR is for here, just to keep it short and simple. What I did was I was listening to a video from someone else here in the channel, and I believe that's Fatal. He had a video on this particular stock. It was requested for him to review it, and he was pretty blown away with some of the numbers from the stock. There were a couple key things that made me want to be an investor in this stock. This company, Louisiana Pacific Corp, they currently are basically making the majority of their money from either new home construction or siding repair on houses. And I absolutely love that because it's part of an industry that I love, which is real estate. There will be no shortage of having to repair property, as with everything to do with real estate. Everything depreciates over time and you have to get things replaced. So there were a couple key factors I wanted to look at with this. I did start this position out. I'm going to show you the buy on this. So we had the BST money come in, and that reinvested reinvested into BST, and then I put in $6,500 and went ahead and bought shares of this company. This allowed me to purchase 101 shares of Louisiana Pacific Corp. This is something that I am very interested in. I went through the most recent presentation and I absolutely loved it. So I want to take a moment to go over the things that I specifically really enjoyed about this particular stock here. So what you're looking at right now, this is Qualtrim Insights. This is a tool that Joseph Carlson has created. You can acquire this tool by going to his Patreon. This is a tool that I use to just get a quick glance of the things that I really love and find important about companies, and then I do deep dives into the company via their 10K and via their most recent presentations. So I wanted to first take a look at this because this is the quick snapshot glance of a few things that I really like. The top thing that I love to look for is what is the company doing, how is it earning money, and what is its cash versus debts, and are they even a positive company? Are they in debt a significant amount? What is their dividend payout? What does that look like? What does their growth of their dividend look like? And can they sustain that dividend? So the first couple things to look at here that I find absolutely interesting are the free cash flow is solid on this company. It has had negative years in the past. Obviously, during 2020, there was a huge scare, people not wanting to buy new construction properties, stuff like that. So that I kind of am not too worried about. There was a little dip in 2019, but overall you can see free cash flow has continued to grow. It is up and down pretty significantly as there is a cycle to home construction. Usually during the end of the year, it goes down pretty significantly. During early spring, it does go up through summer. So that's one thing that I absolutely love. I love the fact that their balance sheet is actually a net positive. If they were to have to, they could pay off all of the debts that the company currently has. The dividend payout ratio is tiny. It is only 1.43%. But if I look at the dividend growth, it did have a little bit of a dip, but overall, since 2018, it's grown just about a cent every year, which is pretty significant. And then we do a jump from 18 to 22 cents. This is the type of growth that I really like to see. So you got small bits of growth, and then you got big jumps here for 2022. Now, this company was not even remotely on my radar. It is a relatively small cap company at 4.59 billion. It has a PE ratio right now of 4.5. The forward is 12. So it's pretty amazing. Price to book is 3.25, and the free cash flow yield is currently sitting at about 19%. I absolutely love that. One of the things that I really love is what's the trajectory of the company and the stock? How is the stock going to pay me money in the future? Is it dividends? Is it share buybacks? Well, this company is doing a significant amount of both. If I go back and I look at 2017, this company was at about 144 million outstanding shares. They are definitely not diluting the shareholders, because this company has dropped its amount of shares available to the public significantly by doing buybacks. So from 2019 here, or 2017, we're at 144 million shares outstanding. And right now at 2022, as of September, this company is at about 74 million. That has almost cut the amount of shares in half, which is absolutely amazing. It makes it significantly easier for the company to continue to raise the dividend, and it keeps expenses low by, keeping the amount that it has to pay out for that dividend lower by not having as many shareholders. And it is raising the dividend significantly, which is phenomenal. So I went ahead and I started a 100 share position in this company. I like the fact that it was on a pretty significant drop. If you look at year to date, it's down about 18% for the year. However, it is kind of climbing back up. It definitely went down pretty low, about $48 per share just a couple months ago, and it's already back up to about $64 per share. So it's pretty interesting overall. I think that this company's got a very interesting trajectory going forward, and I'm curious to see what their growth is going to be like over the next year. This is a very, very small position for the portfolio overall, so I'm probably just going to leave this one right around where it's at. So right around the mark there of about 100 shares. So that is kind of why I decided to go in on this company. I liked the trajectory. I liked the presentation that they provided. The most recent one is just from the past month. So overall, going forward, I like this as a definite little piece of the portfolio, and I'm gonna likely be adding a railroad to this pie to kind of round this out. It'll probably be around the same size and position, so you can look forward to that in the very near future as well. So we do have a couple more individual stocks being added back into the portfolio for the year. So that brings us to the kind of last segment of the video. Let's go over to the net worth and stocks portion here. So I'm going to show you, last week we went over one of the positions. Now we're going to go over two more of those positions and what those look like. So last week I showed that we have one 401k account that is basically an S&P mirror. That is $66,000 as of last week. So we're going to go ahead and we're going to reveal the next portion, which is a 401k account 2. So this particular account is the FXAIX. This is the FID 500. This is essentially, again, another very S&P similar. This is $370,249.03. This is one of the cornerstones of our 401k funds. The next one I'm also going to show today, that is a total stock market. I don't know why I can't talk this morning. And Disney. Some of you may know that my wife worked at Disney some time ago, almost a decade ago at this point, and we had invested in the company stock purchase. So we have had a Disney position for over a decade, and we're going to kind of dive into that right here. So for the total stock market fund and the Disney combined, that is $140,241.04. This kind of comprises our 401k accounts. This is the total there. It's just shy of about $600,000, and we continue to add to this. So this is going to be continued to be built up over the next decade or so while we progress to get toward early retirement. These funds we won't be able to access for about 20 years, maybe a little bit more than that. For a couple of these accounts. So basically we need to build up the bridge account, which is what the Dividend Doggo portfolio is. And then our goal is to eventually be very conservative. Once we do hit our 60s, many years from now, we will be taking small portions, hopefully, of dividend income off of these portfolios and being able to live off of the money basically in retirement. So that is currently what we're going to do for today, and those are the reveals. Let me know what you think. Did you expect the majority of the 401k money to just be in index funds? If so, drop me a comment, let me know below. This is the primary reason why I don't buy SPY in the Doggo portfolio. It's because the majority of our 401k money is in SPY or SPY equivalents. So that is why we kind of have things structured the way that we do, and why I don't feel at risk as much when I buy individual positions in the other portfolio. So thank you very much for watching. I did want to say thank you again. We are passed up. I believe we're at about 3,500 subscribers now. We are going to be climbing toward the 4K mark, and I'm very grateful for every single one of you. If you made it to this point in the video, drop me a comment and let me know what you think about having the majority of your 401k money in the S&P 500 and total stock market funds. So thank you very much for watching, and I will speak with you all in another video here very soon. Have a fantastic weekend.